Take it away, Lee.
I was going to give one more minute for one or two more people. Just going to really quickly welcome everybody to today's final session of the initial Lunch and Learn series that Steve Carver has helped me to kick off, and really appreciate you taking the time to join us. I encourage you to click on the chat icon at the bottom so that you can share questions or comments with the group or see what the group's commenting about, and you can also click on that reaction icon to react to something Steve says. I'm in Kinston at Lenore Community College, and hope you'll continue to check in with the Small Business Center network across the state. And the most important thing really is if you could just take the time afterwards to complete a survey. That, for our funders, which is the North Carolina General Assembly, that is a valuable metric that we can share with them every year to convince them that their investment in this Small Business Center activity is a worthwhile investment and that they ought to continue doing it. So with that, Steve, I'll turn it over to you, and I hope you learned something today.
Thank you, Lee. It's good to have you on board with us today and your continued participation in the classes. It's always best if the director can be with us and help navigate the course. It's been a pleasure to work with you in this series, and hope we'll have future opportunities. My name is Steve Carver. Welcome. I'm in Dunn, North Carolina. My presentation number 1182. So thank you for joining me on my journey in entrepreneurship, and let me be a part of yours as well. Let me say right up front, I'm not a lawyer or a CPA or anything like that. I'm just an old codger that's been in business for 66 years and counting. Had a pretty good business day already and a great month. So I'm out here doing it just like you are as an entrepreneur, trying to make some grocery money, and it's a pleasure to work with all of y'all. Main thing I bring to you is free advice. So right up front, the best advice I can give to you is always get a second and or a third opinion before you make a big decision related to your business or your financial security. And the small business centers are an excellent place to get that done. They are there to serve and to help folks. And if you are not in the Kinston area, but would like to get in touch with your small business center director, just over in chat, let me know or send me an email, and I'll be glad to hook you up, get you into connections, and even make introductions for you if you'd like. Today we're focusing on what a new small business owner needs to know about taxes, depreciation, record keeping, and at the end I'll share with you some selling skills enhancement tips that will help you close deals as we go down the road. Hopefully you checked in early with Lee, and he has emailed to you some study guides. With each of my presentations, I offer you study guides to help you have an outline to follow the course with, plus other items that we interject into the course as we go along. This week, your study guides includes a quiz on our previous lessons, just to give you an idea of kind of rounding it up and putting it all together as we do in our academy courses. Last week, I sent to you a quiz that had the answers to it. So this week, all you have to do is just go back and look at the answers and transfer them over to the new sheet and try to remember this stuff, because everything here will help you, and send it back to me with your name and address as you would like for it to show up on the certificate, if indeed you are qualifying for a certificate. The study guides include a prep sheet on tax season, understanding depreciation, some special answers to questions that vendors have asked me along the way about North Carolina state sales tax, and a summary of the quotes that we've used all week long. So if you didn't get those study guides, let me know over in chat. Make sure you sign in with your email address, and I'll be glad to send you copies of them late this afternoon or tomorrow. So what's next? After this is the end of a 7-part course. This exact same class, we'll do it again on Thursday night. So if you want to get a revamp on it and join us again, you'll be welcome to do that. It's Thursday night, same sign-in information. I'm excited about introducing a new premier 2 courses, actually. The first one's to kick off on April the 23rd, which would be basically, I'd call it an enhanced academy course, and that we'll be digging deeper into businesses that have started and to try to give you the good, solid information on how to set up your business and create it and get it moving so it will last for the long haul, so it'll last for years and years and years. One of the directors asked me to do this, and I'm glad to do it. I guess my 66 years continuous in business was the reason for the request, and I'm certainly enjoying putting it together and look forward to maybe you folks joining us, and you'll certainly be welcome to do that. Let's brag on you fellows that have been with us throughout the series and talk about some things that you've accomplished. Some people actually go the extra mile, and so I'd like to congratulate them. Sarita, thank you for your continuous work. You're a Master's 12 in the Academy, highest ranking Master's member, so we're real proud of you. And Sarita also does our certificates and helps me get them printed and designed and mailed out to you. So thank you, Sarita. I see you're with us today. Tisha over in Magnolia has been a regular associate with us as well in her sewing and fashion business. We're happy to support Tisha, and I wish you the very best in your business. Hope Mitchell from down at Lake Waccamaw has been a regular member and visitor in the Academy. And at Lake Waccamaw, Terry, maybe we can get her hooked up with you because she's pretty close to your center there. She has a website on Facebook called Hope's Hunt, where she buys and sells various items, and we're certainly supporting her in her efforts, and invite all of you to check out Hope's business. Desiree in Garner and Raleigh area is just came into the area from the country of India. She's got a fantastic background and history of helping folks who need special counseling for children. And so we're wishing her the very best in starting up her new practice in the Raleigh area. Kenyatta is from Clinton. She's out in Oklahoma now, learning about how to get her business up and running. She's going to be selling gummies and on the internet and getting a lot of information out in Oklahoma to how to make that work. Carolyn Jacobs has been with us on a regular basis, and we're certainly proud of her. She's starting a nonprofit to help children with special needs in the Mebane area. Been a very faithful member to the Academy and to the lessons. Stephanie Goodnight, new to the Raleigh area and getting her new business started. She's been sharing a lot of information on how to get started and not quite ready to announce it, but we're wishing Stephanie the very best of luck with her business. Lynette Barber in Raleigh, a singer. She sings gospel music and jazz music and quite an entertainer. She's getting ready to start her own business to go out and give performances at different venues, and been very, very active in sharing information. Matter of fact, she used our business plan template, sent that in with information about how she's getting her business started. These templates that we gave out in week 2 are available to you anytime, and very, very easy to work with to get your business plan started. She also came forward with her menu of different types of marketable profit centers that she has, and so very, very impressed. 13 different ways she's planning on making money. It's a must that you put your business on a scale like this so that you can see what you're going to be selling That's a key ingredient for you to get your business plan started, so you can estimate your income and your expenses and see where you're going from there. So thank you so much, Lynette, for doing that. She's quite an entertainer, and if you look her up on Facebook, you'll see some videos and get to hear her sing. LaShiva Dunlap in Laurinburg has been really active. She's starting a notary public business, doing some things that I have never thought of before with notary public services, and so proud of her. She's sent us a really good list of her profit centers so she can start working on her business plan. Just very proud of her with the way she's put it together and the different things that she's offering to do. And maybe one of the very best sets of mission, vision, and promise statements that we've had any of our fellow classmates do through the years. LaShiva did a really good job with her mission, vision, and promise statements, and we're very, very proud of what she's doing and hope it works out good for her. So all of you, I'd like to invite you to find the Academy of Entrepreneurs and Associates page on Facebook. Log in there, promote it, manage it, join it, and we'll certainly share information about the graduates of the Academy and your business in a continuing effort to encourage you to stay active, keep promoting, and we'll do our share to help send people your way. Quotes to remember we've been working on all through the class. Walt Disney said, let's stop talking about it and start doing it. Michael said there's no finish line, there's only mile markers, and he's certainly right with that. In entrepreneurship, we're taking it one step at a time as we move along. Bill Gates said that we're going to learn more from our unhappy customers than we do anywhere else. And you know what? He's absolutely right, because if you can take a negative situation with a customer, resolve it, and turn it around into a positive situation, you've probably created a customer for life and a raving fan. So that was a good statement from Bill Gates. I agree. Nelson said that the key to long-term success is to try to give the customers more than they expect. Give them more than they expect every time you have a chance. And you know, I'm not saying give them extra money or give them extra discounts. Customers appreciate the fact that if you give them more attention, listen to them, make them feel important, hear what they're saying, put it into action. In other words, just care. Because most small businesses, most all big businesses, really have a hard time showing the customer that they really care about them, really making them feel hospitality. So when you're able to do that, it's really going to help you keep your customers. Mark Zuckerberg said that the biggest risk we'll take in business getting it started is not taking any risk at all, not willing to take any risk, and that's very true. If there's money in it, there's risk in it. And through our courses, we've been trying to give you good risk management skills so you don't feel so bad about not taking risks. But Mark rings the bell here. If you don't get in business, you don't have to get down out of the stands and get in the game. And when you get in the game, there will be risks to deal with. Jenny said that it's important that you know a lot, but it's what really counts with your customers is what you're willing to share. What you're willing to share with other people. People don't care how much you know until they know how much you care. I think it's a really good statement and to encourage us to reach out and share with other people. And wrapping it up today with our final, number 7, some people dream of success while other people get up every morning and just go make it happen. Just go make it happen. How true that is, and that's what all of us are striving to do. So let's kind of get started along that line. All right, get your happy fingers ready. I want you to, we're going to do a little bit of review in here, and I appreciate it if y'all would type in the chat some different things if you don't mind. So let's just see if you've been paying attention through the weeks. We said early on that one of the most important rules when you're fishing out in the ocean is to keep fresh bait in the water. And relating that to entrepreneurship, what is the very best way that we can keep catching customers? what is the very best way that we can catch customers. The main rules 1, 2, and 3 is for us to keep sending out. To keep sending out what? What is it to keep sending out? Type in over in the chat board, frequent promotions. The word promotions needs to be typed in. If you don't mind, type that right in, get your fingers limbered up. I'll give you the first one. Keep sending out fresh promotions to everyone in your database. So we're learning here and remembering that it is important that you maintain, that you build, that you create a large database of customers. That's primarily email addresses if you can. And then you have a DNA muscle ready to react to send out regular promotions to those customers on a regular basis. We have to remind them that we're here and we're hungry and we've got stuff to sell. So that's a key ingredient here. In bookkeeping, we learned last week, the accountant's job is to focus on the annual reports, tax filings, things like that. But the bookkeeper's focus is to do what? And if you don't mind, go to chat and type in what the bookkeeper reports are aimed at. The accountant is the long term. The bookkeeper is focused on what? Let's give it a try, okay? How about some chat help with me here? Get your fingers working. I'm done. There we go. There's Sarita coming in with a little message. The bookkeeper's focus is on the daily and the monthly reports. The daily and the monthly reports. That's what they're all about. So, if you want to have a diversified profit centers, and you do, I'm recommending that you have at least how many profit centers in your business, a minimum of how many profit centers. And we all want to remember there's 3 different types. That's to bring in customers every day, to create repeat business, and to get some big ticket sales. But a minimum of how many different things do you want going on in your business? Because if you just got one thing going on, it will probably be going south on you one day. So you want to plan to have enough profit centers to keep your business in business year-round and sustainable. And the answer is 5, at least 5 different profit centers. And of those 5, we need to have some different types here. We need some to have profit centers about things that people want and then things that people need. If you have some of each, want and need, then your chances of staying in business just are really magnified and amplified and lets you stay in business year-round with customers. Search engine optimization, we talked about really strong in week 4. SEO, and that is a system, almost an art form that teaches us to focus on web page content for the whole purpose to do what? Why are we really focused on SEO and making sure that we've got good content on our web pages? Fill in those blanks is to do what? It is to help customers find you. How do you find customers? You help them find you. And that's where SEO comes into play. In your bookkeeping, back to bookkeeping, as we talked about last week, the main tools that a bookkeeper has, the main tools that they use, of course, are their software. But in addition to that, with your particular business, it's your C of A, it's your chart of accounts. And your chart of accounts tie right into what we talked about in week 1 and 2, with your different income models and your expense models. As you're naming those, and as you're naming your different profit centers, you're also getting ready to name your chart of accounts. So the bookkeeping ties right into all the other factors that we've been talking about along the way. Overall, I'm encouraging you to find the endurance, find a way to stay in the game, because if you can stay in the game in entrepreneurship, you'll eventually learn the little things, those little tips that come into that you're learning as you go, becomes wisdom, and it helps you be successful. Staying in the game long enough will help you indeed have less stress and more profits, no doubt. We're going to break today's conversation into several different parts: record keeping, depreciation, taxes, and then some selling secrets that I'm looking forward to sharing with you. Part one, we're going to talk about record keeping. So, as the tax world is here, it's that tax time of year, no doubt about. It's on a lot of people's mind, no doubt. Here it is a week before tax day. So, record keeping plays into taxes very importantly, as it does in other types of businesses. So, I want to remind you that you're always wanting to back up your work. Just a real fundamental office management thing is, as you're creating different files and forms and letters and quotations and such as that, always be backing up your work. One of the toughest jobs I had to learn as I was trying to become better computer oriented was to back up my work on a regular basis, because I would hit the wrong button or get distracted and lose my work on a regular basis. And that is really aggravating. So I still do it from time to time, but I've got a lot better at it now. Learn to save your work on a really regular, timely basis as you go. Now, of course, a lot of the software nowadays will save it work for you, but not minute to minute or every 10 minutes or such as that. Find a way to save your work so you don't lose it and have to redo stuff so much. But once your work is done and your invoices are sent out or your files are completed, then we need to find a place to store this information. Two different ways nowadays, of course, in computer and digital files, which you can, more and more people are using the cloud, different storage systems there, or within your own devices on your hard drives. But now most folks are using these flash drive, little thumb drives, we call them, a lot, to download information, to transfer it from one place to another. So get used to using flash drives. They're very handy. I keep one in my pocket all the time, or at least right here on my desk in front of me, so that I can use it, save work, and carry it with me. Then you've got the options of off-site software that people can help you with, and lots of different options there. And, of course, storage right in your own office. So I like to keep a fresh set of flash drives every now and then for a month's work or a certain topic work. And I have a place where I file my flash drive so that I can go back and visit it if I have to. If you're storing off-site or on-site for your paperwork, and that old person that said, okay, computers are here now, so paperwork we don't have to worry about. Well, time has certainly proven them wrong, no doubt. But so when you're storing your paperwork, let me just tell you now, if you're just getting started in business, you might as well just go ahead and buy two filing cabinets and find a place to keep them in your office or your home. I like to use the 4-drawer filing cabinets. And go and find you two of them. You can find them lots of times used. They're very good buys, and they don't cost a lot. But you need a place to start organizing your paperwork. And if you would walk in my office right here, if I shine the camera around, you say, well, Steve, you need to listen to what you preach, because I've had a busy few months right now, and I need to put a lot of stuff in the filing cabinets and get it off the desktops. So I know that requires time and energy, and you have to plan to get it done. But now, here's the main thing. Find a place to store your records that's dry. Don't put it on the bottom on the cement floor in a outbuilding that's on the ground. Get it up off the ground to protect it from moisture in case you have a flood issue or dampness issues. Also, beware that you want to be very much fire conscious, to keep it in a place that has very little likelihood of catching fire. Some of these records are permanent, and therefore you maybe just want to go ahead and consider getting a safety deposit box at the bank. These boxes, you can rent them, good size box, probably cost you $50 or $60, $70 a year. That's a box that's maybe a foot high and a foot deep and 8 or 10 inches wide. But that's a good investment if you don't have your deeds and your titles and paperwork that you just don't want to, you will, paperwork that you just don't want to take any chance on it getting destroyed, or someone having access to it that you don't want. So I'm encourage you now as a new business person, maybe a safety deposit box is in your future and can come in real handy. Some records you're going to need to keep forever, some a few years, the rest of them maybe you can throw away right away. But the ones you need to keep forever are very, very important. So just know that you need to remember this and have a place that you can go put them. Everything from deeds and mortgages, titles to vehicles, your articles of incorporation, your corporate notes that you're making, your accounting statements that you get from year to year, financial year-end statements. It adds up. You're first getting started now, so your stack is very small. If you've been in business 66 years, you can see you need a whole building to keep up with all this stuff. But it's important that you do keep up with it, some of them permanently, and have a place for them and have a system. But now the government's going to recommend or dictate to us, not recommend, they're going to dictate to us that some records we have to keep for 7 years. And that don't sound like too long, but it is when it starts adding up to a lot of paperwork and a lot of boxes. And these records are now, of course, you might be able to keep them on your flash drives, but you know, if you have paperwork there, it's got to be saved and stored, and that's what people do. The 7 years is the number for lots of items that we'll look at right now. I want to go ahead and say I use 8 years because every year after I box up my stuff, more things will come in that I need to put back in the box, and I've already got it sealed or in the storage room. So I just put this stuff that should have been in last year's files right into this year's file in a special folder. So I'll say 8 years myself. But you want to save some things like all your paperwork related to your checking account, bills that you paid, contracts and leases, bank statements, expense reports, employee information are really important that you keep your employee termination information because at some point in time, this employee may have a health issue years down the road after they've left you, and they say that it started while they were in your employee, and therefore they're going to try to collect workman's comp from you. So if that's not the case, you need to have those records to prove it. Also, there's a record called a bill of lading. A bill of lading, you maybe have never heard that term before, but what that is a shipping receipt, a document that documents where an item was shipped from and to, when it was. That's more and more important now that you keep up with this, your shipping receipts, especially in this age of tax clarifications. Many items that if you're selling out of state and you're shipping out of state, then you're not required to collect North Carolina sales tax on. But you had to prove that it went out of state. So that's where those shipping documents come in. I don't recommend to you right now that if you, as you're doing your invoices, especially paper invoices, to print your invoice out, print out a copy of the bill of lading or the shipping proof of it and staple it right to it if it's going out of state. Because if you have an audit, the auditor will look at those invoices one at a time, and those you didn't charge tax on, they're going to say why. And if you don't have a good reason, then you're going to have to ante up taxes maybe you didn't plan, that you didn't collect, but you're still going to have to pay it. So it becomes very, very important that you familiarize yourself with bill of ladings, especially if you don't ship out of state. 7 years, just go right on and on, lots of stuff, including your cancel checks and stubs. You keep up with those, okay? Now, this is a good time to talk about this because we've had so many natural disasters recently in our region. FEMA, you've all heard of that, FEMA, the Federal Agency for Emergency Management, sometimes we'll come into an area after a disaster, a flood, a fire, a hurricane, tornado area, and offer to small business people some very special considerations with either grants or low-interest loans. When they do come into an area and you do need to talk to them about your services, you're going to need to provide proof of the business that you've been doing so that indeed you can have a case to make for them that you need to be reimbursed for the business you lost. So that's another reason that when you're doing your record storage, that you keep in mind, now if I have a flood or a hurricane or tornado, is this going to be a good place that I can go find these records pretty quickly and they're going to be safe? You know, hindsight's a good thing. I built a really nice outside building for record storage 25, 30 years ago when I had my dealerships, and 2 levels, because I wanted to put my records upstairs where they wouldn't have to worry about a flood and such as that, and built a nice structure there and had it all fixed up. Well, about a year later, one of the hurricanes come through and just destroyed the whole thing, and my records went all over 3 or 4 counties, I think, in a hurricane wind. So I learned a lesson there. You know, you pick out your storage places where the wind can't blow it away as well. So give that some thought. This also is where I'll make the point with FEMA. We're all going to try to pay as little taxes as we can, and I'll talk about that today. Excuse me. Tax avoidance is a very important thing. And as we're doing our bookkeeping to avoid as many taxes as we can, you want to be careful in that, because if you have to go before a FEMA authority that's willing to help you reimburse some lost profits you made, and your tax return showed that you didn't make any profits, you're not going to get much help. So doing your books so you don't owe any taxes sometimes can backfire on you in a situation like that. I'll make another mention here to you that that's where depreciation can pay good dividends for you, especially if you're showing a loss on your books. If you have a lot of depreciation, you might be able to make a stand. Indeed, that you have been profitable. You just did a good job with your tax avoidance. I'm going to be talking about depreciation a little bit as well. So understanding depreciation. You could go to college 5 years and study about depreciation every day, and still there'd be more to learn. I certainly can't do much about that here in a 2-hour class, but I can share with you some real good information on do that. So understanding depreciation is something that you need to know, especially if you're going to be selling products or buying assets for your business. I searched the internet and found a document called Understanding Depreciation by Lisa Borga. It is one of your handouts, one of your study guides. Several pages there. It'll take you a good 30 minutes to read it. Do it, because she goes deeper into the situation than I do, and hopefully when you come out of it, you'll have a good general information about how depreciation might be able to help you. Basically, what is it? What is depreciation? Depreciation is the reduction in value of an asset. The reduction in value of an asset that will always come with the passage of time, and we use it and it wears and tears, so the value of it goes down. There are some exceptions, of course, like vintage or antique stuff that might appreciate instead of depreciate. But in general, things that we buy and use in the business to help keep it working, we're wearing on it all the time, and the value goes down. When the company has to declare what it did with its money, and if it has assets, there needs to be an accounting of that. And that accounting of assets that you buy is listed in your depreciation sheet, which is one of the documents in a financial statement. So we're going to be talking about depreciation here for a few moments. So let's talk about this. Let's say that your company right today, you're just getting started, maybe you have borrowed $10,000 to get started on it. You got $10,000 in the bank. So your net worth of your company, your assets are that cash asset, that's all you got. So your net worth is $10,000 for your company value, right? But you need to buy some stuff to get your business started. Maybe a truck, maybe a saw, maybe a sewing machine, some type of equipment, a trailer, who knows what it might be. But today we're going to say that you're going to buy a saw. That's what you're going to do. So when you go buy an industrial saw and pay $5,000 for it, you don't have $10,000 in the bank anymore. No, you got $5,000 in the bank. So the question to you is, because you used up $5,000, does that mean that your company worth is going to go down by 50%? What do you think? No, it does not, because today you got $5,000 in the bank plus $5,000 invested in that brand new saw. So you're still worth $10,000 on your financial statement. So how does that play out? Well, tomorrow that $5,000 saw is not going to be worth $5,000 because things with age depreciate. You drive a new car off the lot and it automatically depreciates 10 to 20%. So what are we going to do? As time goes by, we're going to depreciate, which is saying we're going to recognize that the value of what we have purchased is going down. And we're going to have to make that adjustment in our books. The law provides that you can use different depreciation schedules on the assets that you buy. A schedule is saying, how fast can I depreciate this off my books? How fast can I lower its value on my books? Sometimes on certain items, you can do it all in 1 year. Some items you can take 7 or 8 or 5 years. And some items you can take 15 years. So depending on what it is, this can change. But usually the 5-year depreciation plan on normal things that people buy in business, kind of the rule of the thumb. So we're going to use that. The asset was cost us $5,000, and we're going to depreciate it over a 5-year period. So I could have said we're going to write it off over a 5-year period. Write-off is the common term that we hear all the time. But what we're doing is depreciating items on our books, okay? So the first year, the book value is $5,000 because that's what we paid for it. The second year, it goes down $1,000, $4,000. Third year, it's worth $3,000. Right on down till the sixth year, it's not going to be worth anything on our books. Not going to be worth anything on our books, or it's not going to have any book value. So make a note here. First time I'm mentioning this, the book value has gone down to 0. But that saw is still working just fine, and the fair market value of that saw, in other words, what you could actually sell it for, may be $4,000. The note here is book value has nothing to do with fair market value. You might be talking about the same asset, but the numbers may be totally different, and it's important you know that. Book value is important, but fair market value is important as well. So what does all this have to do with our taxes? Well, the government wants you to buy stuff, especially stuff that's made in America, and the government wants you to go buy stuff to help keep our economy going, because when you spend money, it helps everybody 7, 8, or 10 more times. So to encourage businesses to buy things, they say that if you buy something that you can depreciate, the amount of depreciation that you're taking will let you decrease your taxable income value by the same amount. So each year that you're depreciating the value of your saw, $1,000, each year you do that, you can reduce your tax exposure by $1,000 for that one saw. And it goes on and on and on for the 5-year period. So that says to a small business person, well, maybe I can go buy something new, or it doesn't have to be brand new. Maybe you can buy a new asset to you, whether it's new to anyone else or not, and add an asset to my business. And the government's going to encourage me to do that by giving me a tax incentive to do it. Okay? That's why it's important. So an important ingredient in tax avoidance is how well you use your depreciation tool. All right? Good. So let's talk about what the different types of expenses, because that's going to play into here. There's two kinds of expenses for a small business person to be aware of. General business expenses. General business expenses that will be written off right now, no matter what. It's just a general business expense. Those are items that we use up. And then there's capital expenses. Capital because we're using the term capitalizing them or turning this into an asset or claiming it to be an asset. That's a whole group of different expenses. And as we buy things, at the end of the year, you're going to have to determine whether you're going to put this over in the general business expense column or over into the assets column as a capital expense to be depreciated. Two different functions. Are you with me so far? Okay. Everybody with me so far? Give me an amen over here in chat if you don't mind. You understanding we got two different types of business expenses. Those that are going to be written off and those that are going to be capitalized, okay? So we're going to go back down talking about taxes. We'll come back to the expenses. Everyone and every time that I talk with a CPA, an accountant, experienced bookkeepers, and say to them, look, I got a lot of friends that I'm teaching in class that are facing their first time in business, first time handling any money, first time handling their books. What is the first piece of advice that we should give to our brand new entrepreneur business owners? And without any exceptions, the answer is always the same. Steve, encourage your classmates. Encourage your class members to pigeonhole money, to set aside tax money. Remind them time and time again that this is not your money. You're collecting it for the state or for the federal government. You're collecting this as their money. Put it aside right away and don't get caught in that trap of having a really good business month or a good business season and collecting lots of sales tax and having lots of payroll that you're paying out. And now when it's time to pay all the bills, you pay your bills and now it's time to ante up for the taxes and it's gone. It can happen real easily. The way you don't do that is as you pigeonhole or you put aside all the tax money that you're collecting so that when it's time to pay it, it'll be there for you no matter what else has happened. Now, this isn't only the sales tax you're taking in, but as you're paying your payroll, if you have employees, and you have to set aside those deduction monies as well. Social Security, insurances, other types of deductions employees may be taking, you have to set that money aside too. And that's the money sometimes that really gets new entrepreneurs' businesses in trouble, especially when you have employees, is that you fail to do that. Saying that, okay, I'm just going to pay everybody under the table, sounds pretty good, doesn't it? Probably ain't going to work out for you. Or I'm going to treat everyone as contractors, so I don't have to deal with all that. That's a better way of saying it, but it also means you better have your P's and Q's lined up and everything documented so that doesn't come back to bite you. But focus on, notice I'm putting this way up at the top of the list because it is one of the major reasons that brand new businesses get up and running and look like they're doing really well, and then all of a sudden we're in big trouble. All of a sudden we're in big trouble by not making allowances and getting a regular structured system to set that tax money aside. Back to the business expenses. Some of the items that are just general write-offs, remember all intangible items are write-offs, automatic write-off. If it's intangible, it's a write-off. There are some situations when you're buying or selling an old established business where your customer base has a value that the new owner would be purchasing. Your website may have a value that the new owners are purchasing. And in those situations, they do make allowances to be able to depreciate those over a 15-year period sometimes. So there are a few exceptions to it, but usually anything that's intangible is going to be a direct write-off. So let's talk about rent. Rent's always going to be a write-off. Travel expenses, write it off. Salaries and payrolls, general write-off, because at the end of the day, after you spend that money, you don't have anything to show for it. Okay? Capital expenses do have a life of their own for a long time, things that last. Generally, you wouldn't consider anything as a capital item unless it's going to last you at least a year. At least that you can get a year or two's write-off on it. So if it's a short-term tangible thing, it still might be a write-off. But if it's going to last for several years and help your business have some tax advantages and show net worth of your business, yeah, you would add those in. But depreciation gets real complicated sometimes when you're buying a really expensive piece of land, a piece of equipment where you're borrowing the money on it. So not only are you invested in the initial cost, but you've also got interest and maybe some other expenses related to it, which can also be capitalized and get you some tax advantage on that. So we're talking the basics here. And generally for new businesses, the basics will work. But know that if you're going for a more expensive, large ticket item, you definitely probably want to talk to your bookkeeper and or your accountant about it. But examples, let's say you're buying a new printer like I've got here for $250. Would you capitalize that or write it off? Well, in my business, this printer that I'm looking at cost about $250, and it's lasted about 7 years so far. I have put that on my books. I'm capitalizing it. But a big insurance company that's got 100 agents out in the field, and all of them got these little printers, they'd never capitalize that small amount. They don't want to keep up with it on their books. My books are tight and neat. It don't cause me a bit of problem to add an item to it. But if I had to add 2,500 printers, that'd be a big problem. How about a $2,500 printer, though? Yeah, it's got a serial number. You can keep up with it. It's going to last for a lot of years. You can get a lot of tax advantages on it by capitalizing. Yeah, we put that on. But when I bought the printer, I bought a bunch of printer paper, too. Can you capitalize the paper? Nah, paper's going to be used up and gone. So you would just expense that right on out. Set of tires for a truck. Maybe with someone that this truck doesn't have many miles on it, is not used a long time. These tires will last for years and years. Sure, put it on your books. Get some tax help on it. But if you're a large trucking company, nah. Same thing for a new engine. If I put a brand new diesel engine in one of my vehicles, I don't capitalize that thing. Big trucking company, probably not. How about rental, forklift rental, truck rental? No. If the word rent is there, it's not going to be capitalized. The point here is that my business is going to be different than your business. And every other business is going to be different. And you, as the owner of the business, have total flexibility. Some guidelines to keep you within the riverbanks, but you got a lot of flexibility on what you write off and what you capitalize. So you've got options, you've got choices. And then as you're moving into your first several years in business, this is one of those things that you get advice on. At the end of your year, and you can make these decisions at the end of the year after you see how everything else is shaping up. And it may behoove, maybe you've got owe a lot of taxes, and your accountant may say to you, we need to capitalize some of these items to lower your tax exposure. Or they may be saying that, you really need to be showing a goodly amount of net worth because your business is growing, and you need to show a net worth to your lenders. So this will look good over on your depreciation sheet. So there's times to get advice, and these items bring that to a head. Payroll, write it off. Professional fees, write it off. New set of tools, $4,000 set of tools. Yeah, we don't capitalize that. They're going to be here for 10, 20 years, so I can get me some good tax help on that and show value to my business. However, very few of us are going to go buy a $4,000 set of tools. We're going to buy $30 this month, $200 the next month, $250 in the month after that. So what you do with tools and these type of items that you collect over the year, you put those together, call them a tool set, add up all your little bills, and put a big value on that. But make sure you know where it's at. You've got it in a box. You can show somebody, because if the county tax auditor comes by, they're going to want to see this asset that you're claiming. Let's say you're renting a forklift or renting a truck. You're paying $1,000 a month on it. Rent, write it off. Delivery cost, write it off. It's not a tangible. But here's an interesting situation that may or may not apply to you. I'll give you an example using a forklift rental, because I was in that business for 20, 30 years. I rented to you a forklift for 24 months for $1,000 a month. In other words, you put $1,000 into that forklift, right? No. I put the money in the forklift. You were renting it. You were paying for the use of that forklift. You didn't own it. Because you didn't own it, you can't capitalize it. But at the end of this rent-to-own lease that I'd set up for you, you're able to buy that machine now for $5,000 if you do want to own it and stop paying rent. Well, that was the easy choice to make for you. Say, yes, I want to do it. So you write me a check for $5,000. Now you own it, and you can put that forklift on your books for $5,000 value. So we're going to come back now and talk about book value versus fair market value. That forklift went on your books at a $5,000 value, which is absolutely correct. But it has a fair market value of probably $20,000. So fair market value and book value, not the same. You want to remember this, because when you're looking at the book value of a business, sometimes the book value may be real low, but the fair market value of its assets may be real high, or vice versa. So important to know the importance of that, especially if you're buying or selling a small business, okay? Well, it's tax time for sure. April 15th is just around the corner. So what do you need to know? First of all, try to find an experienced bookkeeper that understands your business. Not just understands QuickBooks, but has a general knowledge of maybe how your business works. Starting out with a bookkeeper that does not can be a very difficult chore, okay? If you are shopping for a bookkeeper, you want to remember experience counts. Get recommendations, get references if you can, and check out the affordability, of course. Know that you can get bookkeepers in 1 year to the next, and you can change as you go along. But sometimes changing is very time-consuming and causes lots and lots of conversations and stress, so keep that in mind. The IRS has a little website paragraph that they give you some help with. CPAs, indeed the same situation. If you can find a CPA that has experience in helping customers that are in the same business you're in, that's a good thing. But generally CPAs, well, not generally, but always CPAs have had a period of time when they were in training with an experienced CPA. So even one brand new that's got their license generally is ready to do work for you, and they'll find out the information they need to get. Can you get along without a CPA? Well, you can, provided you find a really experienced bookkeeper, lots of experience. But the key here is that bookkeeper needs to have a liaison, a good working relationship with a CPA, so that if they get into issues with your particular books or your particular situation when filing those tax returns, that they can go to the CPA and get professional advice. They don't have to pay a price for that, which they're going to pass on to you. but sometimes, indeed, the experienced bookkeepers can do it all for you, save you a ton of money, and you pay the CPA expenses when someone's actually there asking questions on your behalf. If you go to an audit, though, you're going to want to carry the best folks with you, your bookkeepers and your CPAs, because that's important if you get in a situation, okay? What is the difference in tax avoidance and tax evasion? A lot of instructors would never touch this subject, but I want to tell you it's very important that you do, because tax avoidance is a good thing. You need to avoid paying the taxes that you don't have to pay. Tax evasion, on the other hand, is not a good thing. Let's see here what I've got going on here. Okay, tax avoidance is legal. I encourage it. Most anyone would encourage you to do that, to use your tools available to you to avoid paying taxes, because the tax, in my opinion, is set up. They'll take every penny you have if you don't justify why you're not sending them all your money. And that's the way of thinking about tax avoidance, and you want to do that. And I've already mentioned several things today, and I mentioned some others that are important. However, tax evasion is very serious. That's when you're lying, cheating, and stealing, misrepresenting, okay, to avoid paying taxes. That is evasion, and that is against the law. And you don't want to put yourself or your bookkeeper or your CPA in a position where they're sending the government information that is false, okay? Everything needs to be pretty clear on this stuff. What are the hot buttons? What are people always asking about as you're getting your business started? And that's what we're going to focus on now, okay? It's always comes back to talking about the deductions. Generally, these are the ones that are most talked about, with the home office deduction being number one always. So how much business tax type deductions can you get if you have a home office? Basically, by the rules, it is what percentage of your home is being used for your office. If you've got a 1,000 square foot apartment and you're using 10 by 10 space in that apartment as your office, then 10% of your home is your office. And therefore, 10% of the expenses that it takes to keep your home going, 10% of that total would be your deduction, business deduction for a home office. Got to be careful here estimating that space. If you have to explain to someone why you've taken 600 square feet instead of 100 square feet, that might put you a little bit uncomfortable in the chair. So remember to be frank with that. Always, what makes it a whole lot more simple is for you to have an outside office, outside building, detached office, something you can claim is for office work and office work alone, a place that is not your home, that you're not living in. When you can document that, then here's what you can do. You as an individual can rent that space that you own to your company. You put it on a little rental form, and each month your company pays you individually rent, okay? That takes away the percentages and such as that. That rent coming to you as an individual will be taxable income. But that rent as it leaves your company is a deduction, a write-off. So it indeed equalizes itself out with a few exceptions. The advantage of doing it is you don't have to get into the square footage stuff, and all the money that it takes to keep your office up, to do this, to do that, your loan, your landscaping, your cleaning, your repairs, things like that, they are write-offs for your business, automatic write-offs, okay? And that gives you some gray area on what all was going on there, but a little perk might come into play as you do that. Travel, interest, rent, taxes, insurances, uniforms, clothes that you wear and use in your business, all those will be general write-offs without any trouble whatsoever. Then you talk about the vehicle, though, your car, your truck. If you own the truck and it's in your name and you're using it for business use, then the business gets to reimburse you for every mile that you use your vehicle on business. And I think that rate is in the 60 cent, 70 cent per mile range now. It changes from year to year. And that means if it's 70 cents per mile, let's say that if you drive your car 100 miles in business, then the business gets to pay you $70 for the use of the car. Okay? Now that money comes to you from the business tax-free. It's a write-off for the company. Now, let's say that the company owns the vehicle. You chose that the companies don't own the vehicle, and you're using to do company work on. But also, you're going to need to sign a form about how much personal mileage you use that company vehicle for your personal use. And for those miles, you're going to have to pay the company back a like amount as if we talked about before. Generally, if you're using your personal vehicle and getting a good return on it from the 65 to 70 cents per mile, generally you can operate a car at a good expense, a good used car, replace it on a regular basis, and pay for it monthly payment-wise, come out all right. It's worked out fine for me for a long time. Now, how this tariffs that are going on now, and they're talking about the prices of vehicles escalating, certain this and certain that, a lot. This coming year, you have to revisit all this stuff because it's liable to change. The general deductions. How about the tax preparers and collectors? Who is it that we're talking about doing business with and about? Who are the players here? And how can you save money doing certain things? Some of you maybe through the years have always at the end of the year, you don't do your own taxes. You just get all your paperwork together, put it in a paper bag, and go carry it and hand it to the tax preparation person or the accountant to do the taxes for you. Well, if you're dealing with an accountant, you need to remember that every piece of paper, everything they do, is going to be accounted for. It's going to be written down on a piece of paper and itemized, item by item by item. And there will be a price tag for each item. So the more work that you create for the accountant to do for you by bringing them more and more documents means your bill is going to get higher and higher and higher and take longer and longer to be resolved. And each piece of paper may create another question, which means they're going to want to talk to you about, and that talking time is added in too because it has a value. Everything related to a CPA is the tick-tock, 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 price going up, up, up. So let me encourage you that to get all your paperwork together, stack it up into like piles, all your utility bills here, all your insurance bills here, all your health insurance bills there, and vice versa. And you do the totaling up. You get your ad machine, add up each individual thing and come up with your own totals and do a summary sheet where you break down the different columns or types of expenses and put totals on them. You doing that instead of the accountant doing that is saving you money. And it's giving you a really good indication on what's going on. Tying this all back together in what we've been doing for the last 6 weeks is this will always come back to your chart of accounts and to your business plan. As you're adding up these individual items to see your taxes, you're getting some good information that you can plug into your business to plan. Now, there will be some items that you're going to have to carry to the tax preparation person. They want to see copies of your 1099s, the tax forms, your W-2s, your county statements, proof of any estimated tax payments that you've made. There are a few items they want to see the actual documents. Now they'll certify that and give them back to you when your paperwork is completed. But the tax preparers don't have to sign a document that everything that is written here is the truth. They don't sign it. As far as they know, they're submitting to the government a truthful statement. So there's some items that they're going to want to see. And indeed, they've got the right to ask for anything. And so you certainly want to make sure that you give them all that they need, but no more than they need, okay? Who are you dealing with? In business or not, we still going to be talking about these same four groups of folks. Local is the city. The town clerk's office can tell you what you need to know. County, your county tax collectors in your county seat at the courthouse. North Carolina related taxes, we call that the NCDOR, North Carolina Department of Revenue. And for the federal government, it's the U.S. government, U.S. Treasury, or the IRS. We pay taxes in a lot of different forms. I cover everything with the tax word, but it might be called a permit, a license, estimates, and fees. To me, it's taxes. So, working locally, you can generally get the information you need very quickly, very easily from a very friendly person at your local city hall. Same thing is true in the county. Generally, counties are very helpful and have people there that's ready to work for you. We're unique in North Carolina in that North Carolina, NCDOR, and the Secretary of State's office go above and beyond to help entrepreneurs get started, get in business, understand all that you need to understand. So we have to give them really good marks compared to some other places, and we appreciate that fact. U.S. government, the U.S. Treasury, however, they're kind of out of touch. They're hard to get up with and hard to find the same person time after time. So we have to deal differently with that and just know that there's going to be delays and stress and misinformation if you're not careful in trying to understand what they're saying. That's why I have no problem recommending to you. If you have to deal with questions and answer important documents that you don't 100% understand, get advice and get help. Your CPA, your accountant, your experienced bookkeeper, they know how to talk with these agencies, the NCDOR and the IRS. They know how, when, forms to use, and when they get an answer back, they understand it or know how to ask questions on your behalf. They can go to those agencies without ever mentioning your name, so you don't have to feel like you're giving up any privacy. So I'll tell you, as an experienced business person, this personal advice. When I have to deal with these agencies, I generally let my accountant or bookkeeper do it for me. I found through the years that was the easiest, stressful, least expensive way to go. So you can take that advice if you'd like. In your study guides are lots of information about detailed how to get up with, how to contact, how to be in touch with the different agencies. And so I've given you that in writing in your handout. Now, through the years, classes like this and folks like you have asked me time after time about different tax questions related to getting started and going to street fairs, pop-ups, different events, special niche market groups and things like that. What to do about sales tax? So in your study guides, I'm giving you detailed answers. I basically asked my bookkeeper to check out these questions and come back to me with answers. And when you see what you're referring to here, like yes on page 119 here, I'm referring to the codes, and you got copies of those particular codes in your study guide or the link that you can go find it. So the first question, when a vendor at a vendor's event, like say at a craft fair or festival, are you required to collect and report North Carolina sales and use taxes. You're here in North Carolina doing this. And the answer is yes. If you go somewhere and you're selling something and it's taxable, you're required to collect those taxes, no doubt about it. And do you collect those taxes based on the tax rate in your county where your office is, or on the tax rate where the event's being held? The answer is you collect taxes on the rate where the event's being held. And that can change up to maybe 4% in North Carolina. Some different counties may be as low as 6.5%, and some others may be as high as 10.5%. I don't know any of those for sure. I just know that our county is 7%. But when you go to an event outside of your county, you need to ask someone what the tax rate is, and your event organizer will know that. Are North Carolina vendors required to collect North Carolina taxes for items shipped out of state? The answer is no, you're not. You're shipping an item out of state, but remember, you want to keep up with that shipping document, okay, to prove that point. And let me say now that this is a real hot issue with all taxing agencies in all states. It's subject to change. You always want to stay on top of this. So I'm telling you, this is unofficial answers and information that I'm sharing with you. Are North Carolina vendors required to collect sales tax for other states when they're shipping into those other states? Unofficially, nah. Officially, yes. However, it's wide open, different folks, different strokes, different things going on. Generally across the board, from some research that I did and my bookkeeper did and other people have told me, that if you're selling into a certain state, let's say you got a lot of Virginia customers, and you're selling less than $100,000 a year to Virginia customers, then generally Virginia is not going to bother you about tax money you should have collected for them. But if you are selling over $100,000 a year, there's a good chance they will. So you're taking a chance when you're not otherwise, but talk to your whoever's going to help you with your taxes and see what they have to say about this. I've been relying on my advice that if I'm selling less than $100,000 a year in a certain state, then I don't worry about collecting taxes for those states. Unofficial answers are just that, but I'm giving you the details here in your handout and the links that the laws vary from state to state, and the federal government is always apt to be making changes. So this is a changing situation. Many times you'll go to a small event, you set up, you want to do some business, you don't hardly sell anything. Maybe you even sell less than $75 worth of stuff. The question is, are you still supposed to collect tax on it and report it no matter how small it is? Official answer is yes. There's not a minimum. It's yes. So as you're collecting this tax money, you keep a record of where you collected it, how much, what that percentage amount was, and then you file in your next time that you do pay sales tax, you write that on there and you send it on in. Does the NCDOR offer a fact sheet related to all this stuff? Yes, big time. And you can go to ncdor.gov, search for frequently asked questions, and spend hours reading answers because they're all listed there. If you're a North Carolina craftsman, that is, you're building things to sell, and you buy raw materials and create a sellable product, do you collect sales tax on that sellable product? The answer is generally no. However, there are some exceptions or different ways to approach this. Let's look at it like this. You go buy the stuff, you go buy the items that it takes for you to make this product, and you pay sales tax on everything that you buy that goes into that product, then generally you wouldn't have to add sales tax on it when you sell it. However, if you get yourself a North Carolina resale exemption account, when you go buy these items in the future, they won't charge you tax. You'll have a tax number to give them instead of paying tax. Then you come back and you make the item and you sell it, and you do collect North Carolina sales tax on it. This may vary from time to time with different products, but indeed that's a good unofficial answer. And then, again, if you want to dive into this, I've given you the link to start at. Different types of taxes, withholding taxes. Remember, if you got employees who are not contractors, then you've got obligations to collect taxes on their behalf and pay it to the government. Privilege license are those licenses that say that you can do business at a certain place. Unemployment insurances is indeed what you collect when you're paying salaries and payrolls. And franchise, hey, congratulations, you get to pay a franchise tax. Whether you own a McDonald's or a Chick-fil-A or not, we all file in corporate returns, business returns. There will be a line on the federal and state returns, franchise tax, and it will range from $50 to $200 depending on the size of your business. That franchise tax is going to be paid whether you make any money or not, and nothing to do with your income. It's just what I think is the government's way of saying, well, you're going to pay us a little bit just to handle the paperwork. So those franchise taxes will show up. Now, we're going to talk about the county now, because the state and the federal folks, they're interested in collecting taxes on your income, on your income exposure, the amount of money you bring in after you take the deductions, all of them that you can, what's left, that's your tax exposure. They want to collect taxes on that income. The county, on the other hand, don't care a bit about your income. What they care about are your assets. And therefore, we don't do a full circle here. We don't come right back to that depreciation sheet and those assets, because that's where the county makes their money. And basically, everything related to your county tax return as a business will come right back to the depreciation sheet for your business. They're interested in different vehicles, inventory you may have, tools, real estate, leased equipment, anything that's an asset that you got control over, taxable. So keep that in mind. Your county taxes are generally due to be filed, that is, you list down your filing, at the end of the year. And they will send you in December, usually the 1st of December, a tax filing statement, kind of like you get for your personal tax listings. And you're obligated to have that form filled out and back to the county before January 1st. So here's a little problem. All that information that we needed to put on the tax return is probably in our depreciation sheet that our bookkeeper or accountant is not going to give us back until around April 15th. So you can't fill out your county business filing until you get your depreciation sheet back. So that's the reason for you to know that in every county, they generally have a website, of course, and the tax people will have a place for a small business or any business to request an extension for the county filing. It's a good idea to go ahead and do that. If you ask for an extension, it's going to be automatic to you, but you got to ask for it and save a copy of your record. But if you don't, when you do pay your taxes, or when you do file your taxes, you don't have a 10% penalty on your taxes. Generally, that's not a big deal with a small business just getting started, unless it's a big business as it starts. So you want to keep that in mind. Lots of times, you can just ask your accountant or your bookkeeper to help you with this county form until you actually get up and running and have an ongoing business that's going on, because you're going to have a very small amount of, generally a small amount of assets. It'd be real easy to figure out and to fill in just a few minutes and just go ahead and do it and be done with it. But once you start having to wait for that depreciation sheet, then you definitely need to get that extension. The radar screen that I'm talking about here is generally that radar screen for auditors. And the IRS, of course, comes in from time to time, and the state DOR may come in from time to time and audit your personal or your business books, or both. Anything that an IRS auditor finds, they share with the state, and anything that the state finds, they share. They share with the federal people. So that's going to go on. Just because one entity is giving you the audit, the other entity indeed might or will get the information to you. We want to stay off that as much as we can. And the good news is only 1% of the folks are audited, but indeed you may come up in a random lottery and you may be the lucky customer that gets the audit. But there are some things that we can do that will help us, that will increase our chances of being audited, and that's what I want to talk about now. I call that, there's no reason to wave a red flag and say, come on over here. And there's several ways, things that you can do and ways you can do it that actually invite the auditors to come and check you out. Number one, using shady, not so ethical tax preparation people. Today, we can ride around in the neighborhoods and see signs sticking up, I'll guarantee you X amount of money refund. Big refunds, let me do your taxes. What those people are saying is, I'm going to do all I can to get you back all the money you can get any way I can do it. And I'm not going to go ahead and say even if it's illegal or unlawful, but just how they twist it around. Indeed, they help you get some big returns, but when the returns come in, I will guarantee you somewhere in their fine print, they get a piece of that, sometimes maybe a large piece of it. And if you're complicit in that, knowing what's going on, then you're going to be in trouble. Because when the auditors come next year after next, these preparers are going to be gone. You're not going to be able to find them. So deal with people that's got a good reputation. I understand now for tax preparers, there's a code that they use where they're certified by the North Carolina Department of Revenue as well as the IRS. Make sure they got that qualification, okay? Unreported income. If you got a significant amount of income and you're not reporting it, the tax people understand that's the way that folks try to dodge paying their taxes. They understand what vocation you're in, how much that annual income average is. They have people that will sit outside your office and count how many clients are coming in, like the beauty shop in the backyard, the barber shop down the street. They actually count how many people are coming. They'll look at used car sales to determine what the volume of sales going in and out. In other words, they have a way of estimating how much income you've got based on what you own, what you're spending, what your monthly payments are, what your deposits look like. And if you're way off in that reporting, red flag. Not filing on time on a regular basis without a good excuse, year after year, raises a flag. Now, I just gave you an example of why businesses have to get extensions, and that's accepted. And people, everybody from time to time may need to get an extension. Some people just plan for it. So I want to tell you now, if you, something you may not be aware of. Because a lot of people need to get an extension because they don't have enough money in April to pay the taxes that are due. So they will say, well, I need to get an extension. Give me some time to raise some money. When you do that, number one, let's say that you owed $100 in taxes on April 15th, and you get an extension to October. Well, in October, you're going to still owe that $100 plus interest from April to October. Okay, no penalty, but you're going to owe the same amount plus interest. Now, if you just don't file and wait till November to file and don't get an extension, not only are you going to owe the $100 and also the interest, but also a penalty. So it can become expensive to keep extending when you don't have to. Sometimes based on the amount of tax, you're just better off to borrow the money and pay the taxes and keep a clean, clear record there, and then figure out what you have to do. That's it for taxes. Now let's talk about things in general. We're moving into the graduation of the course period of time when we need to say some things to kind of round it all off. Remember what we talked about all through the course. We do not want to say to our customers, take it or leave it. When we're pricing and presenting our products for sale or our services for sale, just don't say, here's the price, take it or leave it. What we do want to say is, here's a great advertised price, it's very competitive. We certainly would appreciate your business. And we've got several options we can talk about as to how and when you make your payments, the form of your payments, whether it's delivered or not, whether it's assembled or not. Let's talk about making sure that we can close this deal with you. Do not say take it or leave it, because when you do, lots and lots of customers will just say, okay, I'm going to go shop some more. And you put them to the wind, giving them to your competitors. Raving fan customers. Go out in the world and preach for you, send more business to you. So we want to do all we can to create and follow up with raving fan customers to help us stay in business a long time. We want a long growing list of email addresses and cell phone numbers of our customers and potential customers. So we could call that our database. And with that database, we've got a vehicle to stay in touch with them with constant promotions. We want to remember that our very most important web page is our mobile page, the page people see when they call you up on the telephone. Because 85 to 90%, and the number is growing, every bit of shopping that's going on in America starts with a telephone screen. And your mobile page needs to be powerful, because that's where it all starts. There's a thing out there called My Business at Google. And as you get your business up and running, one of the first things that you want to do is get that My Business at Google account, because it's virtually a free website for you. It's virtually a free website for you that can automatically on day one start sending customers to your location, showing them your pictures, showing them your places where people have rated you, do quotes. It's just loaded with opportunities. So My Business at Google is an important place for you to be as soon as you can be there. Your second most important internet pages are your landing pages. The landing page is the page where you have sent, where you have directed, where you have herded customers through SEO to a certain page to buy a certain product. And that landing page needs to be just right. It needs to be designed to take somebody out of the market, get an order for you, and make money for you. A website or your internet marketing campaign that does not include landing pages, I think I can guess and say to you, you're not going to have much of a business. But if you do know and understand landing pages, that's where you're going to make your money. In the internet world, several things make a lot of difference to help customers get past anxieties. And testimonials is a biggie. A customer will sit and read testimonials for hours before they give you an order. And when they go look at the competitor's page, it doesn't have any or weak testimonials. They will come back to the place where they feel safe because other people have had a good experience here. Throughout the course, I've mentioned videos a lot, especially YouTube videos. And I'm going to remind you that it's a new learning curve. It don't take long to get past it. Even I was able to get past it in a few months. That YouTube videos is the difference in whether or not your page ends up in front of all your competitors. Google owns YouTube, And Google says if your webpage has a YouTube video on it, it's going to come up before any pages that do not, searching for the same search term. That's strong, that's powerful, and that's real, and can make a huge difference in your business. The Golden Goose marketing campaign that we talked about in week 3 ended with us saying that the magic marketing moment is what it's all about. The Golden Goose marketing campaign not only gets you started from the beginning, but all the way around to making the sale. But that's only halfway there. Making the sale or having that customer interaction is halfway to your marketing campaign success. You don't get to the marketing campaign success until you experience the magic marketing moment when you can say to the customer, I've done all I can to see you're 100% satisfied. Appreciate your business. Want you to recommend us to your friends and neighbors. Now tell me what it was you were going to buy next. Tell me about that person you said would be a good prospect. What items do I need to add to be a better provider for you? Give me some information to help me last for a lot of years. That magic marketing moment when you're sharing with your customer back and forth and they're feeding you the information you need to know for what's next. What's next? How am I going to stay in business year after year after year? You do it by having magic marketing moments with your customers, taking this what's next information in and putting it into your structured marketing plan. It makes money for you and it keeps you in business. All right, moving now from taxes and depreciation, deductions, moving into not sales 101 for amateurs, not sales 202 for sophomores, not 303 for people with a little bit of experience. I don't compare you right now to sales 404. Things that you want to know, need to know as you're starting in your business life with customer relationships, which hopefully end up with opportunities for you to close deals. So let me share with you some 66 years worth of experience, and I hope that it helps you. The mindset, number one, always be closing. ABC, the ABCs of longevity. Always be closing. That is saying to you that as a business person, as an entrepreneur, the first thing on your mind is cash flow, and that means closing deals. Okay? That's just fundamental way of thinking. Another way to understand, there's no doubt about it, is people want to buy from people they trust. And without the trust factor being involved, your chances of making big ticket sales are nil. And people have a right to guard their trust. That's why we have to relieve those anxieties, because they've got to trust you, and you have to work in that direction, knowing that it's on their mind. There's 5 things going on amongst new folks these days, and some old, that make a major difference in whether or not you can move forward in a relationship with a customer that can mean lots of revenue for you. Number one, in the age of cell phones, the question is it okay for you to take a cell phone call when you're in a meeting with a customer? Is it okay? Maybe in 2025 you might say, sure, it's okay. If the person I'm talking to wants to take a call while I'm talking to them, sure, it's okay. But it's not. You listen to the old fellow here with the gray hair, and I'll tell you that when you stop pursuing your closing in a deal with a customer or presenting your presentation, when you stop doing that to take a phone call from someone, then you're saying to the customer, you're not as important to me as this possible phone call. And he knows or she knows, and we all know, that a phone call coming in can be returned, or they can leave a message. Just like earlier, I had a phone call from a very important associate, and I left him a message because I'm having a relationship with you guys. even if the other party is taking phone calls and saying, excuse me, I need to take this, then your answer is sure. But in your DNA, from here on, leave the phone in the truck. Talk to your customer. Let them know that they are important to you, makes them feel important. And that's an important factor for time after time, year after year in doing business. Maybe you like a certain type of cologne that has a pleasant odor to you that may make someone else nauseous. And I'll have to step on some people's toes here to do this, but it's what I do. And forgive me up front. But if you're a smoker, a constant smoker, then my friend, you smell. You have smoke odor. And with some people, makes them nauseous. On your clothes, in your car, wherever it's at, please try to quit smoking from the sales standpoint. It does you no good. Same thing about dog odors, tobacco spit, different things. You've got your pet peeves. Everyone does. And you have to eliminate those if you're going to become the professional salesman that's really after every deal that you can get, and know that it's important to respect other people's space, including their airspace. Man, is this a big thing nowadays? Political views? Whatever your political view is, I can say to you that 49 to 51% of the other folks disagree with you. And if you want to bring that into the conversation and take a chance on because you are assuming that this person agrees with your way of thinking, don't assume that anymore. The smart business people are not going to give you the clue that you need to make assumptions, because they know that you may go somewhere and having more mouth than sense, say to someone else, well, old Steve-O said this, this, and this, and this, and that person they're talking to may automatically write old Steve-O off forever because they don't agree with my politics. It's really, really important that we know that is a factor today. Now, same things go true with lots of other factors. You already know this. What I'm encouraging you to do is to have a mindset to make the customer feel important, talk to them without these side issues becoming factors, because you're wanting to get rid of anxieties and not create them. Let's say that someone is on a phone call, and is it okay for you to walk into an office where the person you want to see is on the phone? No. You do not want to crowd other people's private space and earshot space. Maybe they're waving you on in. It's okay, come on in. No, you just say, I'll wait a minute. By you doing that, you're showing a degree of professionality that is rare these days. And it will ring a bell with the person that you're working with saying, man, he's got some pretty high standards. I like that. Even though they waved you on in. I like that. Remember that. It can make a big difference. It's the little things that make a difference in creating that long-term relationship. Thinking that you've got the deal in the bag. This is my deal. There's no sweat about it. I indeed am going to get this deal. But tomorrow, they hadn't called you. The next day, they hadn't called you. And when you decide on 3 or 4 days later to follow up on the deal you thought was in the bag, they tell you, you know, somebody else came by and I had a little bit better to say. And I tried to get up with you, but I couldn't find you. But anyway, I've already closed the deal with someone else, and we'll do it again next time. What can you do except cry? Always be closing. Cash flow is imperative. We don't take for granted that we're going to get a deal. We follow up. We don't bug them in a way that aggravates them, But there's nothing wrong with calling up that customer saying, I am so anxious about doing this deal with you. I really want it. We value your business so much. Do you think you can go ahead and give me the order today? It's a good day to buy something. I put on my trading pants today. Let's do the deal. Be hungry. Let your customers see that you're hungry. They're more apt to give you the deal than someone that's not. Follow up. Be aggressive. Work for it. Remember, as a new business person, you need to be adding people to your customer base every day and not taking for granted just by some false sense that, hey, I'm cool. People want to do business with me. I got a good deal. I know we're going to get this order. Man, you will be surprised so many times and be disappointed. Now, if you followed up with it and you stayed on top of it and you lose the order, so be it. That's small business. That is entrepreneurship. But if you didn't follow up on it and do your very best to lock the order in, then that's where laziness and procrastination and real easy to fix skills that need to be enhanced, that's what caused you to lose that deal. Then do something about it. Stay on top. Today's world is an urgent world. People want to hear from you. These 2 calls that I've had in the last 3 minutes indicate there's an urgency here. This person wants to talk to me. I need to get back to them as soon as I possibly can. I don't need to wait till tomorrow night to return these calls. Someone sends you an email, they're not doing it just because they feel like it's good. They sent you an email because they want to reply. Stay on top of your business. Check your email often. Check your messages often. Check your texts often. Prompt response goes a long way to getting you the order. Tardy response is an imperative way to lose the order. I'll guarantee you. The competition is aggressive. There are people like me out here telling people like you how important it is to stay on top and be aggressive. You're going to take business away from a lot of competitors. And by golly, that's what we want to do. So deliver your information, solve those problems, act like they're important to you to make the customer feel important. Now, basically, Sales 404, this is getting right down to where the gorilla in the jungle, he's in charge. And my friend, as the entrepreneur in the room making a proposal, you're in charge. If you'll take that charge, if you'll show that leadership, you'll be in charge. So never tell people, Rule 404, never tell people all that you know. Part of your importance, part of your worthiness is that you know stuff. You've been to training, you've been through Steve's classes, you know some stuff that other people just don't know. And you're going to keep it to yourself and give it out as it helps you. Keep these little tidbits of information to yourself unless they're helping you close a deal. Never itemize your quotations to the point that people can take your itemization and shop it around. With the internet today, if I know somebody that's in this quote, I can send and ask for a quotation as easy as you did. And customers will do that. Customers will indeed take your quotation, tear it apart, go try to get private quotes from other people, and indeed try to beat your price and put you out of business. That's the human nature of competition. So don't be mad at them, but don't give them information you don't have to. Yes, we can just roll down the river and someone wants a quote from us, I can just send it to them. I've got plenty of quotes. Make them up easy. I've been doing it for 60 years. I can take a copy of this, fix it right up, and send it right out, and it'll look pretty good. But you know what? That's not going to cut it in today's world. Every time you have a chance to make a sale, make a promotion, send a quotation out, it needs to be a promotion. You need to make it something you're proud of. You've got energy in it. The customer needs to know that this just isn't another form quote that you're sending to me. And then you don't send 100 of them out today. It's not about me. It's about you. No. The proposal needs to make the customer know it's all about them. And you fix this quotation just for them because you want their business. That's the level you need to maintain. That you're not going to have a level that you're satisfied at or that you're comfortable at unless you're making the customer feel individually important. Has to be a rule of thumb. Don't tell your vendors' names, your subcontractors, your manufacturers, your drivers, your hotshot delivery people. Keep information to yourself that doesn't have to be disclosed. Now, I like to give a long list of features and benefits with my quotation. Sure, load that up. The more information you give to your customer that way, makes you look good, improves your chances to sell, but not to the point of sharing information that can be traced back to your sources. Through the years, important big ticket deals. Some people just cannot say, yes, I'll take it, Steve. Yes, let's do the deal. Some people hate saying yes, even though they may want the products I've sold them or I'm getting ready to sell them. Even though they've saved and waited for years for the chance to buy it, when it comes right down to the time to do the deal, they can't say yes. And you will run into this. Maybe you don't realize it at first, but you will see that the real anxiety here is within the person holding back because they've still got anxieties that won't let them turn loose of the money. Some people will fight it to the point of, like this little girl's picture here, I'd rather cry than give up this money because I like having some money in my bank. What are we going to do about that? Well, you need to know, in whatever degree this problem is coming to you, it's important that you know that we're at the presentation point now. We've been through the selling. We've been through all the product knowledge, qualifying for the money. We're at the point now, if they want to buy it, they can buy it. And it's up to you to know that your presentation needs to be a work of art. That means you have prepared it in such a way that it looks good. You've prepared it in a way that you're energized for the moment, that your view of what's going on is clear, you know your objectives, to the point that you can express to the customer, we're going to do this deal. Your attitude, your presentation is, we're headed to a positive thing here. And when you have that, instead of, well, let's take a shot at this, I'm not sure I can close this deal or not, that automatically puts you at the disadvantage. So you want to be ready to take whatever it takes. This gentleman here, Dr. Mesmer, a fantastic guy that lived a long time ago. I wish I could have met him and shook his hand because he has made me a lot of money through the years. You ever heard of him? Well, he's the fellow that the word mesmerized was named after because he documented different ways that led to mesmerization and such as that. So in today's world, it's real, and we all know it's real. Dazzle, charm, hypnotize, grip, fascinate, a lot of different definitions that we use for mesmerize. I always come back to thinking about my grandson, Colin, who stayed with me a lot when he was a baby. SpongeBob SquarePants, come on the TV, Colin was right there, right up close. And indeed, whatever was happening in the room, it didn't make any difference because Colin was into SpongeBob. He was mesmerized. And maybe y'all have had experiences personally or with children to know exactly what I'm talking about. He had him. SpongeBob had Colin for as long as he was on the air. That's what we're after here. That's what we're after. Mesmerizing your audience when you're closing a sale. It's like a drama on a stage. It is so very important. It's like the drama on a stage. It's like you're in a church service with a great minister who has really studied hard. He's got his sermon down pat. He had the music all lined up. He's got his gestures all lined up. He knows exactly when he's going to say this and exactly when he's going to say that. And he knows exactly when to pause and to get your attention. It's a beautiful thing when that happens. And it's a beautiful thing when you, as a professional salesperson, learn how to close a sale. For me, I can present it to you with this example. It's like I'm looking for that aha moment. The aha moment. Maybe you've heard this factor before. To me, that's when you are holding your grandchild or your great-grandchild, and they've been crying all night, got the colic or whatever, just blasting out their vocal cords forever, and you're weak and you're tired, and, oh, me, is this young one ever going to hush? What am I going to do here? You're looking for an aha moment. And finally, after you've taken the baby out and drove them around the block 10 times in the Buick or pushed them in the stroller or did whatever, you look down into their eyes and that little three-pointed smile comes up and they look up at you and they go, the aha moment. Yeah, because you know at that point they're going to close their eyes, have a smile on their face, and drift off to sleep. Because for whatever reason, at whatever time, they gave up the anxieties, had the aha moment, big exhales, and they're going to be happy, and you're going to be able to go to sleep, and you're going to be happy too. How do you get the customer with anxiety to the aha moment? First, they got to like you. You have to work towards it. They have to trust you, have to work for it. They have to know that they're getting a good deal from you. They have to know that the price value you've explained is excellent, and they're going to be very comfortable doing business with you, with your reputation and the warranty of the product or whatever like that. And now it's time for you to master the main negotiator on your game to help them release all those anxieties so they can breathe easy. How do you do it? Well, I'll tell you that every professional who deals with people with these types of deals all the time, they know how to do it, and I'm glad to share it with you because that's when they buy. How do you do it? You use gestures. As you're talking with them, as you're closing your case, as you know they have moved into the buying range, you start using gestures and you start shaking your head. You know the things to say because you have practiced it. You're structured. You came in ready with your arguments. And when you see that customer start nodding, agreeing with you, and when you're shaking your hands like this, you're indicating to them a precursor to shaking hands. When you do this, and now you're going to lower your voice and pause, because when you do that, they're going to listen closer to her. And you're shaking your head and your hands, and they're doing it, and you reach out and you say, let's shake on it right here. Shake in. Let's shake on it right here. Let's shake on it. Or you take your pen and you go down to your paperwork and say, okay, here's the number. Let me just draw a circle around and initial it in here. You just initial it right there. They don't have to say yes to do the deal. That's the point. And if you're sitting around saying, tell me yes, tell me this, tell me that, then maybe you're never going to get this deal. But if you relieve them from the anxiety and the responsibility to say yes and give them options to shake hands, to sign just put their initials here, or sometimes just give me a nod, you're going to close deals that you wouldn't have closed otherwise. And more importantly, the customer's going to feel so good about it because they're going to do all that and then they're going to buy from you. You're making the buy. You're making the sale because you knew how to help them get rid of the anxieties. And when you're a pro at it, it can make a major, major deal. So think about it, practice it, consider it all. look at the handouts that I sent you this week and last week, and they'll help you a lot. Practice it. So, my friends, we have moved up to the last few minutes in a 7-part course, 14 consecutive hours. Thank you so much for joining us, those that have been with us the whole way. And we've got 3 or 4 that have attended every session. So glad to have you. Right now, we got Sonia on board with us, which I think, and Laura too, which I think are 100% attendance. So congratulations to you guys. You won some achievement certificates. As you send in your homework assignments or challenges and do more work, you become eligible for Academy membership and graduation. Stay in the race. Stay in the race. Make it good. And it'll remind you that things won't always go well. You can get knocked down a bunch of times. Be willing to charge your batteries. At least once a week. Have a structured place that you can sit and be quiet and meditate, pray. Find a way to charge your battery. In the Bible, it says, be still and know that God can help you in a lot of different ways. I believe that Jesus Christ is my Lord and Savior, and I can go to him, and he really helps me. And I want to say to you, wherever you find your encouragement, use it. At least once a week, take an hour or 2 for yourself with meditation. Charge your battery. And then go out and set the world on fire as a fired-up entrepreneur. Thank you so much. God bless you and your family and your business. And I'd appreciate any comments from you if you'd like to make them. You can turn your mics on.
This is Sonia. This session from start to finish was amazing. And I am going to send in my business opening too. I want to do it, have it ready for you Thursday. So I just want to let you know that. I'll be the same.
Thank you, Sonia. It's been so good to work for you and with you, and I just can't wait to see that information pouring in. And I really hope it goes well for you.
Thanks for your encouragement. You are one of the greatest.
Oh, man, you make me feel too good. Thank you, dear. Anyone else have any comments? Mary, let me say to you how glad I am that you were with us today. This is a typical session and for our entrepreneur series, and so I hope you've enjoyed the session as well. So Rita, we've got some certificates to print up after today and Thursday night. Are you ready for the challenge?
Yes, sir, I'm ready. Just send over the list and the names and stuff.
Fantastic. Really good. All right. And Laura, let me give you a special hello. How are you doing today? I don't know if you're still at your mic or not. And Faith, thank you for your continued support and staying with us. Let me ask, who is that Chicago 733 area code? Do you got your mic on? Okay, no response there. Okay, everybody, y'all take care. Look forward to seeing you in our next sessions. Remember, again, I'll be doing this exact same session Thursday night. Just use the same dial-in information, and we'll see you then. Take care. Good day. Have a great week.
See you Thursday.
Okie doke.